Welcome to another daily recap where we look at levels identified in the SPY or spiders and use those levels to trade the E-mini futures during the trading session. Today is January 17, Wednesday, January 17, 2024. It's a few minutes in front of the opening bell, about 9:20 a.m. Eastern. And after the market closes this afternoon, we will circle back around and analyze the trades that were taken at these levels. So not a lot of action today. They did hit one level and they meandered around it without a lot of conviction either way. There was one trade activated in the E-minis when the spiders hit 471.36, and it was right after the 9:45 a.m. candle closed, and the price in the spiders was under that level, but not by much. If the spread between my level and the closing price at the 9:45 a.m. candle was within a certain range, I don't add the 5-cent buffer. So this trade was a short trade at the market in the E-minis the moment the spiders touched 471.36. So at this point in the day, there really wasn't much pullback from that level. In fact, when the trade in the E-minis got within a couple ticks of the profit target, about right here, they pulled away pretty fast and went up and touched the underside of the fumble threshold zone. No harm though, as it was just a test, but I don't really like it when they come close to the base hit profit target, they miss it by pennies and then move away and get back out of the money quickly like that. A little bit of back and forth is typical, but it makes you wonder if that near miss was your trade. But treating this as a process, you wait to see if they give you the base hit, and if they don't, and certain conditions present themselves, you need to be ready for the plan B. In this case, a fumble signal in the spiders became active when the E-minis were at about 5 points out of the money, and there was still room on the leash for them to run higher up to the next level if that's what they were going to do. So the plan B was to reverse the position at the fumble signal. Now, today I did something a little different, and I'll mention it. Usually, what you want is the reversal to give you a base hit and wash the loss from the fumble, at least some of it. But this was right after the first hour of the trading day had closed, and that candle was at a very interesting place on the chart. I'm looking at several other time frames and charts on my other screens, and the first hourly candle of the day gave you the impression the spiders were likely to change trend in a bigger way. Here, I'll show you. So here's a 60-minute chart of the spiders, and there's other indicators on here. As you can see, there's volume moving averages up through a Fibonacci retracement level on here, because I want you to look at the hourly candle here at 10:30. This doji candle, look at the low of it. They came within pennies of the 61.8% retracement, and the time it took them to get from this point high, this little interim downtrend here, to this point, well, let's just say that there were just several indications that this could be an interim low, and they were going to find a low and reverse it from here. And I fully expected them to go up to my next level at 473 and even maybe fill the gap left open from yesterday, because I'm long at this point. After the reversal, like I said, I expected them to go higher. So that's a longer term perspective. Like, you could be long from this area against the low of this hourly candle, but that's another lesson for another day. It's not what this short term base hit strategy is all about, but it's good stuff to know either way. So with this in mind, I moved my profit target a little higher and got a few more points than just the base hit on the reversal. It was more like 7 points. I wanted to be out of there before they got to 473 because, like I said, I expected that to be the next short trade. That's what would be activated. But as you can see, they just stalled out and never got there. So kind of a lackluster day. It had the potential to establish a low down in this area and take off from there, but they kind of just went to sleep instead. The trade data entered into the log for today is exactly what you would have expected if you were playing by the rules. In other words, not the few extra points I just explained based on the first hourly candle. So the fumble gave back 5 ES points to the market, and the base hit washed 4 of those points, netting a loss of 1 point for the day. So that's a wrap for today. If you find these videos interesting or helpful, consider leaving a comment and let me know your thoughts. And if you're so inclined, feel free to subscribe. I'd appreciate the support. Thanks, and have a great day.